All right. Yeah, at USC at Indiana, if Ohio State's undefeated at the end of this year, they deserve to win the national championship. Same with Michigan. All right, we're going to go ahead and start. Thanks for being here. Just type in a 1 if you can hear me and see the screen. All right, perfect. All right, so background on what we're doing today. I mentioned it in the video I did last night. When I did the meeting in Phoenix, I came in early on Thursday with the sole intention of having the 3 or 4 relatively new ones to what I do, sit down with them for 4 hours in the afternoon on Thursday before the meeting started, just to go over all the language and all the things that we do that I do. And it turned out everybody showed up pretty much. I mean, we were missing maybe 1 or 2 in the room. And I hadn't even invited the online people, and I did at the last minute, and several of them showed up because I really didn't plan on starting the meeting on Thursday. And then, people made comments afterwards and kind of think they like Thursday more than they like the rest of the meeting because I was just talking in the program and what I do and things like that. So I'm going to kind of try and duplicate without going through the whole slide deck what we did on Thursday, which means slides for 10 minutes, 15 minutes at the most. Then I'm going to pop into the program and I'll come only back into slides to give you definitions. I will go through some of the tools for John, Randy, but I'm not John. And I'll do as well as I can with them. Um, and, John has a lot of stuff. And I use, and this is what, whether it's good or bad about how I am when I trade, is I seem to pick up a few things from everybody I listen to. And I don't do everything that one person does, and I kind of do some things that many people do. So I'll show you the things in John that I like and how I'm using his part of the tool. Um, Probably going to be 3 hours. Um, and if it's longer, it's longer. You don't have to stay to the end because I'm recording it. So thanks for being here. Yep, I'm using 1.15 today, Alan. Um, Sometimes you'll see things on my screens and wonder why you don't have them. Because sometimes I'm using a beta version and I don't always know what's new. But the way that Praveen and I have worked this out is before we put something out in the Windows Store that blows, oh, you're very welcome, Randy, that blows you all up, meaning it doesn't work. I use it for a day or two. So I pretty much always have a beta version. Sometimes that's good, and sometimes it's bad. Um, and sometimes I point at a different server and mine's not working and I'm getting freaked out. And then I unload the beta and put in the one for the Windows Store and it works fine. So that's why they're betas. So if you don't know me, my name's Jeff Scott. My marketmripro@gmail.com is my email. And again, remember, although I know most of you, I'm going to assume other people are going to watch this. And I could see folks that came from, from John's family pretty much. And the website is sweetertrade.com. And I'll mention my top-down trader Google group. It is not a active group where it's like Discord. I did Discord before, but I work full time and I have no way of keeping up with Discord. But what it is, it's where I send things to. And it's worth joining for the sole reason that when I post something, I send a note to that group. If I'm doing something like this, if you don't want to watch YouTube videos every night, I get that. They're boring as hell. Just ask my wife. If you don't want to watch them when I note giving a notice of something, it'll be here. So, and this is not a selling webinar. You'll see the slides to sell things 2 or 3 times because if I don't, then I'm not being fair to my partners. So this is for education. It's anything we talk about, spirit of education. not investment advice. I do these videos just to show you in these seminars how to use my tools. And trading involves risk. You'll are solely responsible for any investment decisions you make. And trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. So I put these out there and then I couldn't find where I put them. So these are my current codes of what I'm showing you. Some of them, like the indexes and the ETFs for the sector or for the commodities, there's no codes because I think they're just standard with everybody. Um, but I'll show you how to use these as we go forward. And I think there's a little bug in 15 on creating layouts, but I didn't have time to call Praveen before the meeting. And I don't know if it's in my version or all the versions. So I'll show you how to use these, but this will be posted when I post the PowerPoint and the video. Those that were here Thursday night, when John and I did our, believe it or not, first video together ever, um, he has spoken at my meetings multiple times. When they're in Florida, sometimes I'll get him to come live. Um, and um, but I've never really done a joint thing with him, so that was kind of fun. I have to admit, not to be airing dirty laundry, but he scares me. And why? Because he's a pro, and I like what I do, but he scares me a little bit, but it's not because he's a bad person. The guy's a pro. I mean, he actively manages money. He has owned a futures brokerage. When I met him, I couldn't tell what kind of a trader he was because his room would have, you know, intraday futures charts, and you ask him what the season to buy corn is or heating oil or something like that, and he could tell you everything about that. But as I got to know him, and I found this out about a lot of these big name people, I think it's the day trading stuff and the intraday charting that gets people to come. But if you look at what they actually do, they trade stocks and they trade in a swing to position, and that's where you make the most money. So John does trade a lot like me. He's got a much better background. My God, if you were there yesterday, you heard how he ended up working with, I think it was George Lane, the founder of Stochastics, and learned technical analysis from a guy who's got his tool in every program ever made for technical analysis. How cool is that? Um, and I'm so happy to be working with them. And the point of this slide here is we are doing a live meeting November 5th to 7th in Palm Beach. It's going to be 2 days at his club on Thursday and Friday at the club, and then Saturday at the Hilton Garden Inn because the club was booked on Saturday. It's a great atmosphere at both places, and we haven't really broken out how we're going to do it. My guess is it'll be hard for me to stay there all day Thursday. So to me, the optimal way will be for him to do Thursday and I'll do Saturday and split Friday. But whether we're going to tag team, go back and forth, or break it up into those sections to be determined. There's the link. If you just go to the website, in fact, since this is an important thing and we are already, and this isn't one of these people who says to you, if you don't go, you're going to miss out. The room is limited in size. And John's people signs up much earlier than my people. So if you go to personsplanet.com and you can find out more about it here and the event. And so it's personsplanet.com and just go into seminars and you can find out more information. And I'm probably the only person in America that doesn't know how to make these graphs. Alan always makes them for my things, and Mary made it for that one. And then here's the selling slide. All right. If you don't have the product, that's fine. If you want to reproduce what you can in other products, that's fine. When I had Praveen and when Praveen volunteered, Praveen, one of genius when it comes to programming and everything else, my goal wasn't to write a novel of new information that didn't exist. My goal was to take what I've learned from everybody, from reading and seminars, and create a workflow solution that would make my life easy. And for those that were there Thursday, you heard the original intent was just to make me a scanner so I could scan the market at 3:30 and be able to front run the next day. Because if I had my signals, and I'm a breakout guy, it's one of my favorite trades, and if I see it's breaking out, why would I want to wait till the next day to buy? So that's what it was created for, and we're going to go through it today. So if you don't have it, um, just very quickly, Market MRI Pro was the program that was built for me. From the minute I had an active demo beta of that product, I was suggesting to John, hey, there's something we can do together. There's something we could do together. Um, his TradeStation package, which I know I'm not the only one on this call that has. In fact, let's see if it's even up here anymore. He used to sell this for like $35.95 lifetime. And I just wanted to get the TradeStation package, which I think is a combination of one and two. Um, I just wanted to get that in a way that I didn't have to use TradeStation because even though it doesn't happen to John, whenever I use TradeStation, the dang thing gives me these boxes open up that it's shutting down when I'm running my scans, and I wanted to make it easier. So John has basically put what was in that TradeStation package, and he's put his some of the newer things and some of his lists, and then he's got a bunch of other things looking at the 13F filings and things like that. So there's things from John in this that don't exist anywhere else. So if you have my original product, the upgrade's $1,500. If you have my original product, and you bought it in 25, you'll get a $495 annual fee this year. And if you end up switching to the new product starting next year, the following year, your fees go up to $895 for the data and the support because you're getting two, not one. And it will be at the later of your anniversary date of the 25 payment or in 26 when you upgraded. So if your payment comes tomorrow for July and you upgrade in August, your 895 won't be due until the August time frame. Speaking of the annual fee, I personally hate auto renewals. The number of things that I get the note the next day that I've just updated for stock fetcher or something like that for another year. I haven't used the thing since the day I first signed up for it, and I forgot. I hate it. So I'm not doing automatic uh, charging. So I will send out to about 10 of you who are due in July, probably in the next week. And you got to the end of July, and the only challenge is I use the emails that Stripe has. So if you don't look at that email, it's worth taking a look at. Um, and I'll bug you a little bit. I'll send a personal email because I'm afraid sometimes that those notes get flagged as spam. If you don't have either product, it's going to be $38.95. We launched it at $31.95. And if you could see me, I'm giving you a little wink, wink. Go sign up for Top Down Trader first, and then you get an extra $200 off. So it'll be $31.95 minus 200, and then $895 annually. We have not decided when the launch price goes away. I'm not planning on taking away the $1,500 upgrade anytime soon. So I'm not by any means pressuring you that you need to do that today. If you don't want to buy it and you want an extended trial, whoops, that was interesting. I got to mute off. All right. Okay. If you guys can still hear me, I hope. Just type a one. I want to make sure when I mute all, I don't mute me. Oh, maybe you can't hear me. Okay, great. Um, so we're going to lease it quarterly with no extra data fees for 585, aka bad deal compared to owning it. But we'll give you $100 off the first quarter, which knocks it to 485. And if you notify me before the end of the first quarter and you want to upgrade to ownership, you'll just pay, well, somebody on this call notified me yesterday, so they're going to pay 31.95 minus the 200 because they already signed up, I believe, for Top Down Trader, minus the 485 that they paid, and then that will get them so they don't get penalized. So if you want an extended trial, that works. If you want a short trial, it's $5. Why do we charge? Because I don't want a bunch of people signing up who are not really serious, and because the data costs me whether you're a paying member or not. That's it on the sales side. I've been doing videos for 20 years for those who came from John's world that don't know me. I am just a normal guy trader. Um, I trade the way I trade. I've been trading the way I trade forever. And I'll show you some snippets of performance, which I'm going to probably stop after today because I've been hacked. I'll tell you more about that later. Um, if you're looking for my options thing, 2 or 3 Saturdays ago, I did a 1 hour video on how I look at directional options to swing trade. Um, I used to buy things and hold them for way too long, and my kryptonite was I didn't sell, and then something would hit, um, and it was like, dang, I should have sold. The taxes difference would have been a lot less than what I gave up. So I sort of changed my approach in the market we're living in because it's too choppy and whipsaw. So I do mostly short-term trades, 1 month, 2 month, or shorter trades instead of long-term buy and hold and actively manage, not buy, hold, and forget. So I do a lot of options trades, and I may be the only person talking about it who trades broken wing butterflies the way that I do. But as some of these stocks have gotten to be, look at SanDisk. It's still, is it $1,800, $1,600, $1,200? How many shares can you buy of SanDisk? Right. Not hundreds of, not thousands of shares. So I like using options in those scenarios. But go look at what a $100 out of the money call costs on SanDisk today. It costs a lot of money. And so you got to figure out spreads, in my opinion, that allow you to get in at a price that you can afford to, especially if it goes against you. I can't buy something for $100 that is $100 out of the money with 20 days left in it. I just can't. I mentioned Top Down Trader. To sign into Google Groups, click All Groups and find Top Down Trader without the hyphen. You link your email. All that means is that when I send a message, um, Google sends you the message. You want to be out of the group? Simple, just unlink your email. And how great is that? A mailing list that you control, not the guy you signed up with, who seems to always ignore your unsubscribe notices. So, for those that don't know me, I am by training a cancer doctor. I'm board certified in internal medicine and oncology. I've been in the markets for, gosh, 35 years. I quit practicing in 2001. And this is, little known fact. And I didn't, I didn't know business until I started trading the stocks. I've got no formal business trading. But it turned out from looking at stocks and reading about companies and balance sheets that some guy pulled me out of my practice and gave me a company to run. And we've been working together. His name's Raj. We've been together since 1998. And I've built companies with him and sold them. Two to Cencora, formerly known as AmerisourceBergen, one to Cardinal, one that I had some involvement to Magellan Health. And we're not talking little companies. And I didn't go to business school. I just learned it from trading stocks and reading balance sheets. Now, I'm currently involved in the leadership of a company. It's called Integra Connect, which is a healthcare tech data company. It's a unicorn by CNBC standards, and someday we'll either take it public or sell it. We haven't decided. But I've got over 3,000 employees. I literally have an office that's a fish tank. And what do I mean by a fish tank? Well, I overlook the intercoastal. So I've got lots of windows in my office. And like dummies, we thought, well, we should let everybody see out my windows. So I have windows for walls. So anybody walks down the hallway in my office, they can see what I'm doing. So there's no screens on my charts. And I've been teaching people how to trade what I do for a long time. And I enjoy teaching. I talk too much. And to make my mom happy, I still very active in cancer research. I sit on probably if not the largest, one of the largest data sets of oncology medical records of cancer patients anywhere. And we work with a lot of institutions and we publish, publish, publish our data. And what I told my mom, who got mad at me when I quit practicing, is hey, by finding things that doctors could do better, I could help a lot more patients than I could on my own. And that's what I do for my day job. So my whole world of trading, as much as I love John Person, he came in 2007, 8, 9. I've been trading for a long time. It's this guy here, Ian Woodward. He used to always joke, Jeff, I want your second million. And he would say it to everybody because he taught us. He was so wonderful. Passed away years ago. And he would stand up in the room with his British accent and say, I am not a guru. I will teach you to become your own guru. And I think that mantra is what you should want out of anybody you're paying to help you or whatever. Because it's no good if all you do is get a newsletter and you buy things that somebody lists. That's not learning. And so Ian's story was British guy, came over, worked his way up at Xerox, retired. All of his assets were, he had a house in Palos Verdes Estates with a great view. I'm sure that was a very big asset too. But everything else he had was in Xerox stock. And somebody told him that he was making a mistake and, yep, amazing person, and that he needed to diversify. So he started listening to some guy on the radio called William O'Neill. And William O'Neill is the guy that started canceling Mike Webster, who I talk about a lot. I'm a huge fan of. In fact, I already watched 2 of his videos this morning. Um, but Mike Webster and those guys all learned from O'Neill. He wrote How to Make Money in Stocks. When a friend of mine asked me, can I help tutor them, help mentor them? First thing I tell everybody is download that orange book. And when you're done reading it, I'm going to test you. And if you actually read it, then I'm going to teach you. And I think everything starts with that. So CanSlim Made Better by Ian. I've explored multiple educators, software programs, books, seminars, and I'm a grunt. I don't have to invent anything. That's not what I'm here for. I want to make money. And so I've taken the best from all these people I've learned from, and that's what sits the things that are not proprietary in market MRI and now sweeter trade. So just some of my influences. There's the orange book. I'm not kidding. If you can't read this book, don't be on my calls because I can't help you. This is where it starts. It's the basis of what I do. In fact, even though I don't know if John ever read the book, there's, John, relative strength, person market catcher. Well, there's a lot of relative strength tools. They're all over William O'Neill stuff as well. I'm not saying John copied that. John invents his own thing. In fact, John doesn't even like to be exposed to other people's things, and I get that. And like I said, he's something special and really he's a giant. But O'Neill with How to Make Money in Stocks. This is O'Neill. He died within the last couple of years. And by the way, there's a theme about death here, unfortunately. This is Ian at the front of one of our Palos Verdes estate meetings. Unbelievable person. And the amount that he gave, you could call him up on the phone and talk for hours about the markets. Ron Brown, Ron and I were friends. I'm jealous as heck. I'm not jealous of anything about him personally or anything like that. I'm jealous that he got to be partners with Ian. They formed Woodward and Brown Investing, and Ron started in the classroom just like me, sitting in the audience, and became Ian's partner. Gil Morales and Chris Catcher, pocket pivots, Bible gap ups, derivations of such are in the product. Um, Great guys. They came out of O'Neill's shop where they managed his money. Chris Catcher, if you've not met him, smartest guy I've ever met. He was involved in the discovery and naming of three elements in the periodic table. So if somebody calls somebody a rocket scientist, this guy really is. George Lee, he kind of had this common man approach, super nice guy. And the reason why I trek out west every year to do a cheap meeting that I lose money on and have a great time is to pay homage to George. He passed a few years back. And George liked having meetings that were cheap. I remember meetings he'd do in Vegas in a hotel room. I'm not talking a seminar room. I mean, people sitting on the bed, people sitting on the floor, 20 people sharing one bathroom in the same room, but they were lit cheap. Steve Bigelow, the candlestick guru, Nissen as well. I kind of like like Bigelow. And one thing about Bigelow and this guy, David Elliott, they would do these, and they're all over the web still, these really long videos, almost every night, webinars live, just talking about trading and teaching people. And they had things to sell, but they weren't selling anything. And I remember David Elliott, who passed away, Bigelow's passed away, and David was. I went to a hotel in San Francisco. I had a sales meeting the next day. I was calling on Genentech, and there was this guy, David Elliott, giving a free seminar. And it was like, wow, that was amazing. So the Mobo breakouts, which is what the breakout dot, it's his Mobo breakouts. And he created something that was a breakout away from chalk. Well, that's what we use. Mark Douglas, trader psychology, passed in the last year or two. Van Tharp, I believe he recently passed as well. Thank God this guy's still kicking. There's John. And he talked about his books yesterday. And my friend Sagar Nandi, who has got some great tools. Unfortunately, he's at a point in life where they're probably not going to go into my product because he's just not, he doesn't, I don't want to say he doesn't have the energy. He just had a baby. He's just not interested in expanding beyond TradeStation and Metastock, which is too bad. He's got great tools I know many of you use. And then Mark Minervini, who is kind of like the applied O'Neill on steroids. So those are some of the ones that influence me. I'm a top-down guy. That's why it's top-down trader, top-down analysis. I swing to position. Now I'm mostly swinging because they're options, but you can have an option and you can hold that option for 3 years. You just have to roll it out, meaning over time, go from a January expiration to a March to a July to a September. And the reason why I like trading options is I do that. That's the rolling out, but I roll it up. So if you started buying Micron when it was 100, and now Micron's 800, 900, whatever it is after it sold off, you don't have $100 calls anymore. You rolled them up to 500, 600, $700, which means instead of buying and holding and taking your money out when you sell, I'm buying and taking my money out every time I roll that option. So it builds up my bank account. It seems to make me make a lot more money from the performance. And I'm sticking to that until we get a better trending market. You only see daily, weekly charts, except after hours. I might have futures up for entertainment. Indicators and scans I use to find my setups. It's a price and volume and a pattern, support and resistance, how I trade them. Equities and equity options. And my A trade is stock in an uptrend, pull back to support, and buy on momentum off of support. And just to talk in John Person language, a stock in an uptrend that pulls back to support might be a high closed doji, a high closed doji if it's a doji. And that momentum off the support is a person buy signal that comes in after that move off of, after that high closed doji. And we'll look at that scan. And then I use rules-based position sizing, money management, and seasonality. I can do my whole analysis in less than 30 minutes. I've got it down unless I talk too much like last night. To most of my videos are 30 minutes, and if I wasn't talking, they'd be 20 minutes. And I haven't changed my basic approach forever. What I'm really good at, and I'm not one that, I'm very proud of my results, okay? And I'm proud of what I've built. And I love teaching. I love the fact that you guys are here on a Saturday morning, but I'm really good at finding bottoms. I am really good at finding bottoms. And April 7th last year, I put out a video that said a bottom is in. Nobody else on April 7th was saying a bottom is in. 8th and 9th, they started coming around. The follow through day was about the 11th or 12th. There was a lot of money made between those 5 days. And so I love bad markets. Now, hopefully I get out in time because when those markets start to go up is when I clean up. And, I'm not going to show, this is probably the last time, and I'm just going to verbally talk. Let me tell you about what happened to me. Um, thank God they went first after my American Airlines miles. I got hacked big time. Now, I'm not saying that showing my results did it. Um, and I was sitting at home one night, and so first I get American Airlines, your email has changed, and I hadn't changed my email, so I knew right away that I was in trouble. So I went online, and I still was able to access my account. And as I'm changing the stuff back to me, this, excuse my French, asshole on the other side is online at the same time, changing it back to him. And then, of course, it takes American about an hour and a half to find somebody to talk to me on the phone, and they send me to the wrong place. Well, ultimately, I got that when I shut down my American Airlines number. We took back his gift cards that he switched all my miles for. And the next day, I'm sitting at home and I watch my computer monitor while I'm sitting there go to a screen that says, please do not touch installing necessary Windows Update. And I'm thinking to myself, that's not how this works. So I tried getting out of it and nothing worked. Fortunately, I powered off. I turned it back on right away and there was nothing, there was no Windows update. So I knew right away. So then I'm not stupid. I unplugged it from the internet and turned off the Wi-Fi. In fact, I turned off the internet to my entire house because I didn't know how many of my computers were being attacked. And then I found spyware on my computer. So I must have, and I know exactly what it was. I bought a computer from Micro Center. They didn't install the driver for the case. I downloaded the driver, and when I tried to unzip it, it acted weird. I did it on two computers. Both of those were hacked. And so I'm hoping I'm cleaned up, but you have to go and change your whole life. You have to go to every one of your brokerage accounts. You have to make them so no money can come out. They're on credit on credit only. What a pain. But last year, and I'm going to show you the influence of that bottom call, I was up 180%. And is that typical? No. I want to beat the averages. If I can double them, I'm happy. I was up over 100% at the end of June. I took some heat through the first 10 days of July, so I'm probably up about 83, 85% thus far in 26. That's not, those are, well, this is annualized because it's the whole year. The 86% is not annualized. And the point is, I do really well off bottoms. All right. And the rest of the time, I want to be a market maker. I don't want to, I expect to do what the market does. And if you look at just from April 8th, the day after my call, to October 8th, which is about the time that that rally started to fail, and you look not at the performance of the indexes, but you look at the types of stocks that I trade, and you look at my account was up 465%. This is not me making this up. This is Charles Schwab, I don't have it sitting here. Um, Daily time-weighted return method to find your rate of return, calculates daily value changes, adjusts for timing and size of any contributions and withdrawals. And this was the equity curve during that period of time. And literally, it was up 465% in 6 months' time. Um, how do I trade? I use options for leverage. I want low cost stock alternatives. I want spreads with limited downside risk. I don't like, at my point in my life, to use margin. The funniest thing I saw was, oh, darn it. Um, this year, I have when it says net contributions, there's minus $12. So one of my spreads had downside risk. So they do put, they attach to your margin. You got to have the margin in case the market collapses. So I had like $12 of margin interest so far this year, which is fine. I have used margin in the past. If in 2020 I was margined up through the gills and my performance far exceeded what I did in 25. Why did I do so well in 2020? Because March 2020 was a great bottom. Avoid big losses. So my spreads are designed that I can only lose what I pretty much pay for them. I don't chase shiny objects, and I scale up and down my cash reserve based upon market conditions. 2 weeks ago, I had probably 70% cash. If you look today, I have 40% cash because I bought myself a present and I had to take out a lot of money. I follow my trading plan. And, John made a comment. I don't know if anybody caught it on Thursday. He said small retail traders with only 1 or 2 million in their account or a couple of $1 million. That's not a small retail trader. A small retail trader's got 5 million, 5,000, 25,000, 30,000. And I had some comments when I used to have a big account that I traded, big account, that they can't relate. So I started last year with 150,000 in my account so I could demonstrate that I could trade a more reasonable size account. But I guess size is in the eyes of the beholder. And I want more time to go on my boat, which if it wasn't thunderstorming last night, I might have gone on today. I may still go on later. My boat's called Stocks and Docks. That's my lovely wife. Michigan football and grandkids. That's what matters to me, which means why am I still working? So I'm going to move to the program, like I said, after the first bunch of slides. I always go too long, but this is number one key principle. Why do I do this thing called top down? Because I truly believe, as Ian taught us, that the market will control over half of what happens tomorrow. If, right now, I don't think there's been any escalation since Thursday. If we go into Monday and there's no escalation in Iran and the straits are open, oil will drop, and I bet the market will pop at the open. But if our missiles are flying on Sunday night, maybe the market opens up really low. Well, my stocks are going to do what the market does. So 50% is the market. I told you how important bottoms are to me. I know that the leading industries is where I want to be, and they lead longer than you might expect. And I want the best stock. I'll keep my positions for over time. I mean, I've run SanDisk and Micron up. I've overstayed my time, but my position size now in both of them is teeny weeny compared to where it was. The markets are never wrong. Your opinions are, mine are. You have to have money management. And if you're ever thinking to yourself, and this is so great, I'm doing so well, I can't do anything wrong, and then you think it's different this time, probably it's time to take half off. It is never different this time. So we may come back to this, but let's go talk about the markets. So I'm going to go through the layouts that I use and just show you the things in the layouts that I pay attention to, things that I'd like to change, because Praveen will probably listen to the video later. And if he listens to the video later, then he'll see what I'm pointing out. So this is typically, if I was working at home, I will have this up on a computer because to me, it's got a lot of good information during the day. Now, we had some data issues. Let me back up. The original intent was to have an end of day program, period. I don't trade much during the day. And then if I could get a delayed feed, that would have been fine because most of my signals, they don't change that fast. And then Praveen, being the overachiever that he is, got us close to a real-time feed. Then we had to go, we're told that to keep this data feed, we have to go pay $15,000 a month and do this and do this and do this. And then you all have to register as pros and amateurs and go pay exchange fees. So we couldn't do that. And so basically, we found another data feed for during the day that isn't real time, but it's close. It's streaming, although we don't really stream it. And we kept the other data feed because we really loved its end of day data, cleanliness, and its the industry groups and sector structure. So we have redundant data feeds. And if the real-time feed doesn't function, it will flip to the delayed data. It's not real-time. If the close to real-time feed. Believe it or not, the exchanges consider real-time to be anything less than 15 minutes. I think this is less, but I don't know how they're doing it because they call it delayed. So during the day on any of my layouts, you see this little thing here, you click it, and if you see a blink, it's because it updated. Yep, that was the update. So it'll update very quickly during the day. On our roadmap is to build an API so you can connect to thinkorswim data or perhaps to Metastock data, and then you'll be able to get real time if you pay for real time, and that's fine with me. Why not? I always look over here. And I rank them by 1 day performance. You have that little arrow here, up and down. Now, I don't like the formatting of this at all, and it moves around. So the first thing I do when I finish that is I hit best fit all columns. It's a quirk in the tool set that we built the program on, and we're trying to get that addressed. Hey, Bill, I didn't see you sign in. Good to see you, my man. So I always look at what's working. So you can see Bitcoin had a good day. Spiders were up 0.43, Q's 0.31, Diamonds 0.3, and Russell was down 0.42. Kind of a quiet day, actually, wasn't it? Although it didn't feel that way if you own biotech. And I kept hearing how great the markets are. It's like, well, don't look at my portfolio. Um, and if you look over here, you could see where you are in the closing range. To me, this is really important. The fact that the spider, the Qs, and the diamonds all closed at near the top of their daily range, I think that's valuable. And I think it tells me we had a strong close. And even the Russell, which was negative, was in the middle of its range. You could see where you are, highs and lows on the day, and where you fell. And you could see that volatility actually traded up 2% at one point, and it closed at minus 2.09 just off the low. So at the bottom of its daily range, you can see here what happened from the open. So I think there's a lot of information there. During the day, I'm pretty much looking here and looking here. One of the things that I want to change, and if somebody thinks that my change is bad, just email me because I'm looking at it from my perspective. I've long looked at new highs and new lows on the NYSE and the NASDAQ, and I like looking at 1 year, 52 weeks. And I want to know what the 52-week highs are, lows, and highs minus lows. And why? Because if you look at strong markets, both of these are plus 100 and plus 200. New highs, bull markets are made on the underlying stocks hitting new highs. So when I see that on the NYSE we're positive 44, we were negative a couple days ago, so at least we're positive, but we were over 100 last week. And then we're still negative on the NASDAQ. So these come out and tell me it's It's not horrible. We're not minus 200 or 300. Now, what I don't have the ability to do with this setup is I don't really care 1, 3, and 6 months. So I've asked Praveen to give me 52-week new high, new low. What was it yesterday? What was it a week ago? And what was it a month ago? so I can at least see how it's trending. So hopefully we'll get that done. He wasn't certain that the new high, new low data was stored that way, so he's checking on that. All right, during the day, I will look at these numbers. This is the key right here. Sagar, who I mentioned before, we're buddies. Um, and buddies share, teach each other, help each other. And he's got some tools that clearly are built upon the stuff that I had that I learned from Ian. And one of the tools he has is called Q Edge. And with real-time data, you could see how many sectors are up in the S&P 1500 at a given moment, what percentage of industry groups are up. Um, I'll get, I see that, Carrie, I'll tell you in a second. And then what percent of the stocks are up. And I love that. So I want to be able at any time during the day to know what percent of the stocks are up, or in the day it's meaningful. So the blue and the green here are yesterday. The grayish white is today. So today is the weekend, so it's Friday's close. And it shows me that the sectors were the same, a little bit less industry groups on the S&P 1500. 61% of the S&P 1500 were up. 43% of the NASDAQ were up. That's kind of weak. And then 61% the NYSE. So clearly, even though the Qs were positive, breadth-wise, you have more stocks below. Now, these gray things, these chevrons, I think you would call them, during the day, they help you because sometimes what you're going to see instead of percentages here are the absolute numbers. And so these are the percent of each one. So we're end of day. So that 73 is matching up to that 73. This 52 is to that 52. I guess there's a 53 under it to this one. So these are just matching up. So I don't even look at them, but because I just look at relative where you're falling. But what it does during the day when you might get absolute numbers, it tells you where they are down here percentage-wise. All right. That's why I do these live. So every time someone asks a question, I'm answering it. And that's why we do this live. And I've learned if one person has the question, so do a lot of others. So you got three markets. At any time during the day, you could see how they're performing. Let me tell you what happens on a day that you're bottoming. And it could be a short-term bottom. The market's down. And you notice that these percent advancing start going higher and higher and higher. And it's kind of like an intraday divergence where the market is still lower, but the stocks are getting stronger. And typically the market's going to follow where those stocks are. Over here, similar to the findings over here, we have the S&P 500 sectors. You know, it was interesting, kind of okay, but not great performance. But every S&P sector was up except for healthcare. So this was not a narrow rally day. It was a day with pretty broad participation. I think that we're now have moved beyond sectors and that we live in the time of themes. And I'm trying to find a source where we can import and not do it manually and have a top-down analysis driven not just by sector, but have it set up so in the timing, in the top-down, you could have top-down by sector, but why not top-down by theme? What theme is working? Because I do think right now themes are more important. So I have here, we have here, Praveen and I, and now John, a large number of themes that you could look at during the day to get a sense. And everybody knew I was way overweighted data centers, which was good for a while. So almost every night I'm talking about them. They're actually up a little bit on Friday. So having themes are important because if you think about data centers, what sector is data centers? All of them. All right, materials, copper, not all of them, communication, optical fiber, networking, utilities, electricity generators, real estate. Somebody's got to own the data centers, digital realty, energy. How about nuclear powered? All right, industrials, Caterpillar. Somebody's got to build them, cement. Consumer discretionaries, yeah, chips. I think, well, they're tech. I'm sure there's some discretionaries in there. Um, Financial, somebody's got to pay for them. Obviously, technology, probably nothing in healthcare. So I can't look at one sector and say data centers. So I think it's important to have themes because they can cross sectors. And the themes that are working now or that worked on Friday were discretionary China, copper, uranium, retail, e-commerce. This one surprised me was home builders because rates were not down on Friday. But I think themes are incredibly important. And I can't wait till you can maybe right click on this and then just open up the components of the theme and see who they are and what they're doing. I tried doing it manually and I gave up. I tried having AI do it and I gave up. Maybe I could program with Claude and it can do it. Um, but we don't build out the industry groups by hand. Okay, I don't sit there and come up with these and then the stocks in each one. What happens is there are companies that sell the GICS industry groups and sectors. So if we can find that, we'll do themes. That's it. Nothing fancy here. Just gives you the heartbeat of the market. But you're not gonna the internals. These things are really good, and try them out during the day. The next piece. So I'm going to actually go into the slides for a second. So bear with me. I want to find what I want to show you. It's going to be here. Talk about the Hindenburg Omen and a couple other things. But actually, first, let's talk about the bongo. Oh, where is it? Okay. This is one of the few indicators that I can say that I actually created myself and 4 or 5 other guys. Ian gave us a job, and our job between his live meetings was to go and create a trending indicator. And we had to use what was in HTSI, the software program, pretty much, because we were able to do some testing of it. And so we combined things and we came up with the bongo. The bongo basically takes 2 components: price versus the 9 period SMA, because you could do weekly, monthly, so it's the period, and then an 8, 14, and a 19 period Wilder RSI. And this turns out that it's a really good measurement of trend, and that I could screen for or scan for uptrends and downtrends. I can scan for reversals by just looking at this. The other thing that I combined it with is this guy, Stan Weinstein. Great book. You know what? I got to put him on my list of influences. Um, he doesn't look like that anymore, and I don't look like my picture on YouTube anymore, so fair is fair. He's probably 10 years older than me. This book, Secrets for Profiting in Bull and Bear Markets, introduced us to stage analysis. Different than I've ever thought about. Being able to scan for stocks in stage 2, stage 4. But what he had here was this thing. And this thing was a 30-week moving average. And I said, huh. In an uptrend, the stocks are staying above the 30-period moving average almost the whole time. And in a downtrend, they're staying below the 30-period moving average. And when it's going up and down, I'm chopping here and I'm chopping here. So I said, how do I think like Stan and take my super duper trending indicator, filter it, and make a decent timing model? And there you have the derivation of my timing model. Up here is the bongo. There is one time frame up here. You could have 2 time frames. You could have 3 time frames on the same chart. There's one. It will be the time frame of the weekly. There is if it was a daily chart, it would be the time frame of the daily. This yellow line is the 30-period weighted moving average. I played around with E's, S, triples, all kinds of different moving averages, and this is the one that seemed to smooth it out the best. And I defined long being the first day that I have both a bullish or blue bongo and a price close above the WMA. And you continue long until the first day that I have closed below the WMA and a bearish red bongo. Why did I do it this way? Because this is a whipsaw, all right? And you know what? This was early. Maybe it was the right thing to do in hindsight, but I want to slow it down and I want to cut out the whipsaws. So I'm never going to be in first, and I never rely upon the weekly for entry and exit. I'm going to talk more about that. But had I would have been long from May 12th of 2025, a month after I said the bottom is in, and I wouldn't have been short until March of 2nd of 26, and I would have captured a big gain. So the way I look at this is I don't even look at anything except this line. We are in a weekly buy signal on the spiders, a weekly buy signal. If you don't know what it is, you see what it says next to my arrowhead. It says timing, so it's a timing model. We're in a weekly buy on the Russell. We're a weekly buy on the diamonds. So spiders, Qs, diamonds, Russell, all in a weekly buy. To me, the determinant of my long short focus is the weekly timing model. But I made the comment, I don't use this for coming in and out. I have to look at other things. So the next thing I look at is the daily. And sometimes I have to go H, line, switch. All right, let me show you a couple of things that may help you as you do your stuff. Number one, I like the charts to have this much data. So I have a 150 here. And I just screwed up the chart. Oh man, what am I going to do to find it back? I did that intentionally. I hit the wheel on my mouse. If I hit this line, it's going to automatically go back to 150. Jeff, I want 500 bars. And I'll go, why? But here you go. There's your 500 bars. Yeah, it's good to step back. But how about, all right, so the way you change that number, and I've got it set, and I think it has to do with this being highlighted. No, this being highlighted rather. Same date range for all charts. So if I take that off and I could have different date ranges for different charts, but I'm going to leave that highlighted. Okay. This is the daily version. Yes, much more whipsaw. It has to be. So for me, how I interpret this tool, my direction, the majority of my direction thought is tied to the weekly. The weekly has been bullish and has been for quite some time. So I am long these markets, period. I currently have nibbled at some shorts, but the vast majority of what I'm doing is long. And with the market rotation and what it's doing, I don't have any shorts going into the weekend at all. I use the daily for conviction. What do I mean by that? At best, the daily is mixed. The spider was in a sell It went to a buy this week. Great. The Qs are in a funk. Hell, they're both consolidating. The Qs are, say, short. The Russell just turned short this week, probably on this bar, and the diamonds are long. So I'm 50-50 here. So, and it's interesting, it's the big caps that are. So I look at the daily as saying mixed. So right away, I raised cash when I lost the first daily. I raised a little bit more cash when I lost the second daily. And then I'm going to use other things to fine tune what I'm doing. But this is not repainting except until the bar closes. On Monday, you're going to have a new bar here. That bar will probably not change no matter what happens because the bond doesn't change that fast. But the weekly bar on the weekly chart is going to change during the week if there's a lot of fluctuation in the market because the bar doesn't close until 4 or 4:15 on Friday. So once the bar is closed, it's not going to change. We do not repaint. Some people consider that cheating, um, including me. If you hit the clover button, it will raise things and make them bigger. Not raise them, but make them bigger. And I think that's important because I want to look at the big picture. Now, this is an automated trend line that I drew. So it turns out, see, I only have new high, new low. I'm trying to think what green. Yeah, that's not in here. I got the WMA 30, I got the price volume, and then I got this thing here, percent change. And when I tag something and that percent change had a check mark in it, which means you're not going to see it. So I'm going to uncheck it. And now, why are you showing me the percent change? All right, maybe I have to add it again. Let's say you want to have the machine put in trend lines for you. So you go up to indicator and just go down to find TL, which is a price related thing, and double click on it. And sometimes I'm not good with my fingers. And if I wasn't on a mixed panel here, I might make a dirty comment, but I'm not going to. So it's now got trend line resistance and trend line support. It's going to take a while to calculate it, but it will now put trend line support and resistance. And I don't think that we're limiting the time because I do believe that it's going to put a line here a little different than mine. So we'll come back later. But we did put automated trend lines in. Like I said, they take time, and the reason is because I got 25 or 30 years of data that it's going back and looking at. I'm very excited because we broke out on the spider. And unless we wake up Monday to a catastrophe in the market, I bet we take out this prior high. And then I don't care about the other things that are bad that I show you. And I think that, like John thought we have a rally coming. We take out this line here. We're at all-time highs. Hard to be bearish all-time highs. I don't know, maybe I have to go back to it. Not yet. All right, it'll come. The Qs, the Qs are not as pretty. The Qs are in a sell. Clearly now going all the way back to the beginning of June, the Qs have gone nowhere. All right, they're down. They're in the middle of that range. So got some trend lines that I drew here. I'd like to see them pop up here. If they pop up, I'm going to feel really good, but Qs are kind of choppy markets are hard markets to trade. If I look at the diamonds, all right, we know it's in a sell. excuse me, the Russell rather, it's in a sell because I told you before, really not that bad. In fact, we're above the WMA, and you could, Trump accounts, a lot of people are going to be buying stocks with that money. You're right. I think it's interesting how many, and I'm not political. I'll just tell you why I'm not political. Because if you were to look at my voting record, you'll find that I vote for both parties. I vote for the person. And if I was running for president, I'd have no votes because I'm a centrist and I think we should be liberal a little bit on social and we should be conservative on the economy and financial. And I bet 90% of you feel the same way, yet no one like us ever runs for election because they can't get elected by their party. But that's a different story altogether. I think the Russell's close to breaking out too. Even though it's red here, I feel good about the Russell, and I'm going to stay out of politics. And the diamonds is in a beautiful uptrend. So I'm mixed on the conviction. That's why I've got cash. But if you had to ask me which way I think the market's going, I think it's going higher. You can update this during the day by doing those. Guess what? I had to update it to get my little trend line. Here's the trend line it put in. So trend line breakouts. Yeah, Bob, I bet you're correct. Let's see. Darn, that's why I have you around, Bob. Bob's an old HGSIer like me. Yep, now you can see up here the price change. I like to see it. Thank you for pointing that out. Sometimes the obvious are hard to see when you're talking. Any questions that I haven't covered on this and how I use it? You can look at monthly and it's pretty impressive how strong this market has been. And the beauty about a monthly chart is it really makes you feel good about being in things for a long time. However, when we get our coming recession, I have no idea when, but I guarantee you we will get a recession again before we die. Then it won't look as pretty. And you'll go through periods of time when CNBC, they'll say, after the recent market sell-off, if you bought 10 years ago and you're still holding, you are negative for those 10 years. And that's true because as long as time is, you can find periods of time where the market doesn't change. But it's always during a recession when you've had a 50% pullback that comes out. And yes, you could even look at minute charts. Why? I have no idea, and they don't move enough to show anything. Or hourly charts. And notice the Qs, diamonds, and spiders on the hourly are positive. But that's not how I trade, so I don't even bother. All right, some of the cool things that you won't get anywhere else. We'll come back to looking at indexes later. Buckets. So let me explain the buckets to you. Close your eyes. John Bollinger created the Bollinger Bands. You can open your eyes now. The Bollinger Bands are a volatility-based band around the stock. And it's designed so that 89% of all stocks will sit within 2 standard deviations of the mean. Now, it turns out the mean is in a Bollinger Band is 20 period moving average. So if you were to put a Bollinger Band on a stock and watch that and look at every stock in the market under a normal market environment, 89% of them should be within 2 standard deviations. That means 11% of them are not within the Bollinger Bands, and say 5.5% would be below, and 5.5% would be above. Now, where I grew up, 2 standard deviations was 95%. But because the markets have fear and greed in it, um, Ian gave it extra room with fat tails. So if I told you that today, and it's not, by the way, that the S&P 1500 had 70% of the stocks above the Bollinger Bands. Anybody want to tell me where we're going to be in a week? Type it in. 70% are above the Bollinger Bands on my buckets. What do you think the market's going to do over the next week? Going to go down. Thank you, Bill. It's always Bill that's responding. So knowing this fact that 89% are supposed to be within the bands and no more than 11% at a given time should be above and below, maybe we can use that. And you're going to see the power of these. Here's where we sit today. So because I get to design my own program because I got this brilliant programmer who does it for me, I said, Praveen, I want the bucket analysis on the NYSE, the NASDAQ, the Russell, and the S&P 1500 because they may not all behave the same. And so you have, starting here, bucket 1, first decile, 0 to 10. Bucket 2, 10 to 20. Bucket 3, I'm talking about percent B, 20 to 30. All the way up to the 10th bucket. So if you take 100 and divide it by 10, you have 10 buckets inside those Bollinger Bands. You have one bucket that is below the Bollinger Bands and one bucket that's above the Bollinger Bands. And I look at this to get a sense of the distribution of stocks in the Bollinger Bands. And I'm no genius. I just know how to use my tools. I could be obnoxious on April 7th because this is what they looked like. Looks a little bit different than today. 76% of the stocks in the NYSE were below the Bollinger Bands. 79% of the S&P 1500 were below the Bollinger Bands. 54% of the NASDAQ and 65% of the Russell 2000. I could be obnoxious and put that video out because I've studied the markets. This is as bad as it, well, unless you're in a recession, is as bad as it gets. And we were not in a recession. We were in a tariff tantrum. Very different than a recession. So, yeah, on a day like Friday, I spend 1 minute because it doesn't tell me anything. It tells me we're neutral. Okay, next. But boy, oh boy, is that powerful or what? Now let me show you some historical stuff. Back when I thought the markets only go up, kidding, it just was a long period of time. And this is a shot from Edge. That's an Excel spreadsheet I built this on. I looked at, no, I have no idea what I built it on. It's an Excel spreadsheet, but it's got HTSI chart. Who knows? I did this 20 years ago, 10 years ago. I noticed that when the market shifts to the left, I'm building up stocks below the Bollinger Bands. More often than not, a bottom is in. It may not be that day, and it may not last, but a bottom is in. So I'm looking, sorry about that, for this pattern. Now, it turns out in an uptrend, when this happens, sometimes you just go sideways. You don't get the same falls. My belief, and I'm going to have to prove it, is if I can find a sustained downtrend, you probably flip the narrative. In a sustained downtrend, you get your rallies when or you get your retracements and your pullbacks when you get too far to the right, and you get sideways movement when you get overly negative. I think it would flip the narrative, but I use this to call tops and bottoms. Here's what happens in a recession. And just to point out the highlight, we're about 75%, 50%, 70%, just as bad as what I showed you for April 7th of 25. The difference was this was the great financial recession. I guess the only reason it wasn't a depression was because I still had a job. I don't know. That was horrible. People's accounts got wiped out. And it turns out one thing about recessions and why I look for one every weekend and I look at the yield curves and a few other things is because a bear market happens every couple of years. And a typical bear market, you go down as much as 20 or 25%. But if you add a recession to a bear market, you can be down well over 50%. I don't want to be down over 50%. So this just shows you how bad the markets were. And this here tells me that 94% of the stocks were below the midline of the Bollinger Band. So let me go back to the program. So neutral. Now, just to go back for 1 second, I didn't talk much about this. This is the same thing as that pie chart. It's the percent above the mid-range, 59%, 52%, 54%. Really bullish is 70. And when you get to 80 or 90, you're getting too bullish. That's the buckets. What I think is the most valuable part of this tool set may be this chart here. So I want to spend a few minutes on it. It does not update during the day, period. Yes, it has this here, but it will not update during the day. Why? Because it has all kinds of breadth tools that only get reported by the markets at end of day. Okay. And so don't look to update it during the day. This is also incredibly powerful. And let me show you how I use it. So I'm going to give all of you, and I have my own teaching style. It's different than John's. I love to teach. Sherry thinks I tell my wife I do this because I'm selling a lot, and that's why I do these. No, I'm not doing it because I sell. I like to hear myself talk, and I like to teach. So I want to tell you about why that's so powerful. So if you remember Stan Weinstein's stages, stage 1, stage 2, stage 3, up here, and then stage 4. Ian, who my son is still supposed to write his book for him, they spent time together before he passed, and he still hasn't done it. But Ian gave me permission to keep his vision alive, and that's why I use his slides whenever I can. When you see this, that's his coat of arms. It's an Ian slide. I was involved in the bongo, so that's my claim to fame. Ian did not invent the Hindenburg Omen, but he certainly brought it out of its grave. So Ian basically created a suite of tools to kind of fine-tune where you are on Weinstein's curve. And if you don't think that every stock does this, you haven't been around the block. Every stock does this over and over again, every index, every industry group, every sector. So I want to teach you about the bingo, the phoenix, the eureka, the bango. We already talked about the bongo. Got to teach you about the Hindenburg Omen. And I want to show you how this is like the ebb and flow of the market. And this is how I fine tune my timing model on a nightly basis. The bingo. Yes, the math is here, and I'm going to share this. It's got Wilder, it's got Bollinger, it's got accumulation distribution in it. This is a signal of the baby out with the bathwater, period. And you'll hear them on CNBC. The Dow was down 4,000 points today as Wall Street participants were selling everything. That is the baby out with the bathwater. Sometimes you see it at 11 o'clock when the market's been bad because of the margin calls and people start selling everything to raise money to pay for their margin. It is a capitulation is developing. When you see a bingo on a stock or you see a bingo on the market, it should tell you that it means nothing necessarily tomorrow, but it might mean we're getting close to a reversal of a downtrend. Period. End of statement. Just learn baby out with the bathwater. Don't worry about the math, unless you're a math nerd. How did he come up with it? He looked at RSIs. He looked at all these intermediate bottoms, and these gray bars are the bingos, and they occurred near intermediate bottoms. This is the baby out with the bathwater signal. It usually signals a bottom is about to come. It doesn't tell you that it's tomorrow or the next day. It could be. It just tells you one is coming. The red happens to be the bango. And the bango is the opposite. Nope, not that red one. We're coming to that one. Never mind. I told you about the bongo already. The bango. The bango is major spikes in new highs and new lows. And it typically shows that there's a lot of exuberance to the upside or the downside. Exuberance does not have to be bad. If you've sold off and you start getting bangos, it tells you there's a lot of buying exuberance. It's only calculated on the new highs and new lows, and it's looking for major spikes. It just tells you they banged it home. They had a really good moving day. And so we haven't got enough to tell you this slide yet. Eureka. When you think of Eureka, and I'm not talking about the city in California, but when you think of Eureka, it's the gold miner who's pulled up the little straining thing from that creek up in the mountains, and he sees a bunch of gold pellets. What does he yell? He yells, Eureka. It's bullish most of the time. A eureka is sort of the equivalent to Ian Woodward of the follow through day to O'Neill. Now, they are not the same by any means. The follow through day is something I use. It's a turnaround day. Both of them could be a turnaround day, a signal the market's going higher, but they're derived very different. The components of a eureka: advanced declining issues, advanced declining volume, and an ARMS index. Hell, I didn't even know what all those things are. I just know how to use them, okay? And they're because I'm not a day trader, I'm not looking at this typically. I know what they are, I'm just joking with you. But it says it right here. It signals a very bullish update, and it can be in whatever market. The NYSE and the NASDAQ are the ones that we calculated on. So Eureka is, I feel really good. I found it. Thanks, George. I did not know that's what it translates. That makes sense. That's why they called Eureka, because they found the goal. Who knew? All right, so when you get a Eureka, you're excited. But I said most of the time. If you've had a really big bullish run and you're thinking, I can't do anything wrong, the market's great, I'm making millions, and you see a big Eureka, get nervous because overly bullish at a top is not a good sign. So Eureka is bullish. The opposite, and this is a horrible naming convention, in my opinion. I think of the phoenix as the bird emerging from the ashes. And I remember my father had a business that went sour, and he opened up a new business. And to symbolize the business was coming from the ashes of the other, he actually called it Phoenix. So I think of Phoenix differently. But in Ian's world, the Phoenix is the opposite of a Eureka. A Phoenix, also made up of AD issues and volume and arms, is a signal of a very strong bearish day. When the Phoenix occurs at a top or in a chop, it's something to be scared of. When the Phoenix occurs after a big sell-off, it's piling on like that Eureka at a high, and it might be a signal that a reversal is coming. So we're going to get back to that in a moment. When I'm thinking now the cycle, I haven't told you the Hindenburg Omen. Oh, I got to get back to that. Things are not all in the best order. I apologize. This is something that most people think is an old wives' tale. I'm not an old wife, and I think it works. It's called the Hindenburg Omen. And Ian, I mean, my dream is for me to get people to find me, and all of a sudden people start following me and have thousands of followers. Well, Ian was this guy with a small following of very loyal people. I mean, I've got, I look at the list here, Bob, um, Patricia, several of you, Randy, Carrie, I think we're all had the opportunity of listening to Ian live. He was amazing, but he had this really limited following because he didn't have a book. We didn't have websites back then. And nothing's got his name on it because he uses funny names. But he puts a tweet out about the Hindenburg Omen, and all of a sudden he had a zillion followers. So what's the Hindenburg Omen? It's a strong warning signal for a market top. The herd, us, are buying, and the pros are selling. And even though this is an old slide, what I'm going to show you has not changed. There has never been a significant stock market decline in history that was not preceded by a confirmed Hindenburg Omen. What's a confirmed Hindenburg Omen? You got to get two signals within like 30 days or 30 bars. But most of the Hindenburg Omens are small corrections. Here are the components. It looks at the number of new highs and new lows. It looks at the McClellan, looks at the NYSE moving average, and 52-week highs and lows. 36-day period, I guess, sorry, not 31-day. Strong warning signal for a market top. Up to 2005, when Ian was still doing his thing, and sometime after, he listed all the periods of time where we had Hindenburg Omens that were confirmed, how many Hindenburg Omens fired, and how big of a decline you got. You will notice in 98, you had minimal, nothing happened for one day. In 95, 6 days, you dropped 1.7. 93, 3 days, 2.1. I kind of think that's what's happened here. We've had little pullbacks of no significance. But you want to, yeah, 23.9, 25, 34, 19, 16, 10, 38. Those are the puppies you want to look out for. This is going to give you an early warning signal. This was 2006. These red lines are the Hindenburgs painting on HGSI, which remains a great program that I use. And I've got them in our product, don't worry. And signaling to be nervous, and then we had an 11% drop. And then all-time highs in 2007, we're good, we're safe. and then the Hindenburg started firing again, and we had a 14% drop. A single Hindenburg omen is nothing. Here's that initial 2007. Oh man, I missed it. But all's good. We're back to all-time highs. And then look at the Hindenburg omens coming in. And you know what happened in 2008. All right. 2018, Hindenburg started firing again. We went a decade with no Hindenburg omens. Why? Because you get them at tops. And when we came on in March 2009, we were at a major bottom. We weren't at a top. So same thing. We get them, sell off, get them, sell off, get them, sell off. 2019, August, boom. This one blows my mind. What did Mr. Hindenburg know about COVID? And when did he know it? Because the Hindenburg omens were firing in January. That be careful, this market's about to top. Boom. I was so, I mean, how cool is that? 22, every time we had a Hindi, you could see what happens. Then I asked myself, you know, the Hindenburg omen, it was created on the NYSE. How do we know it doesn't work on the NASDAQ? Now, why would I care? Because the NYSE is dirty. I mean, you try and clean out all the funds and the interest-bearing things and ETFs and the bonds and the preferred shares, and you got a lot of energy and banks, insurance, I guess some. And you think about the NASDAQ, and that's where tech and biotech live. Well, what good does it do if I don't include those? So I never saw anybody else do it. I'm sure other people do it. I started asking the question. EdgeRater, I can put whatever index I want and run the Hindenburg omen analysis. And what I found was in 22, the red represents the NYSE and the black represents the NASDAQ. And the NASDAQ was firing before the NYSE. And I think it matters. Now, just a quick question. There's three answers. You're going to give me a 1, 2, 3, or 4. Actually, 4 answers, or 4. 1, you own HGSI. 2, you own EdgeRater. 3, you own EdgeRater and HGSI. And 4, you don't own either of them. So 3 if you have both, 4 if you have none, 1 you own EdgeRater, 2 if you have HGSI. All right, John, Alan, you were at the meeting. All right, and when we get done, I want to show you the coolest thing with AI I've ever seen. And I know I wowed people at the meeting because they talked about it the whole time. It's not me. It's how you can run HDSI, create an output. It's an HTML file. Have EdgeRater run against that HTML file. EdgeRater generates an AI opinion of the market. And then I can drop it in Notebook LM and it creates a video. And I now do this every night because it's a great interpretation of the market. The only problem is the AI only is good, only can look back as far as the data is. And Chris White, the proprietor of EdgeRater, doesn't have it back 40 years. He has it back maybe a decade. But my God, is it cool. That'll be afterwards. Most you can hang up if you're not interested. All right, so I've told you about the Hindenburg. Going into, in 25, we had the big drop, which was temper tantrum. Here are the Hindenburg omens firing. Here they are firing. So in our program, these Hindenburgs are these little red triangles. And you could see they don't just fire on the NYSE, they fire on the NASDAQ. In 26, with the Iran conflict, we had confirmed Hindenburg omens on both as we ran up. Second, about to lose that screen. So let's go into the program. I want to talk about everything here. And if we run out of time, then we'll just do it again next week or sometime soon, and I'll go through the JS layout. But I'm all about the market. You can probably figure that out. Let's look at this guy, and let's enlarge. So right now I've taken the market breadth and I've enlarged the NYSE. And I want to teach you what's in this thing. So first, let's open up the gear. When you add a moving average to a chart, okay, go into indicators, probably under price, I think. Let's see, under price. Every time you double click, it adds one. So I've got 3 SMAs and an EMA probably on this chart. Maybe I got 2 SMAs. When they open it up, you either can customize them by doing this before you click, or once you put them on the chart, you can go hit the little gear here and you can tell them to do whatever you want, 50-day and a 200-day. And then down here, you can assign a color to them, a 50-day and a 200-day. If you scroll down here, I don't know why I would want to offset. Maybe if I wanted to change from 5 days ago, I could put in a number and it would show you today's close versus a close 5 days ago. I don't do an offset. I don't know enough to tell you what to do with the support and resistance config. I'm boring. I always use the standard configs on almost everything I do. And then I turned off the follow through days. I got to validate that it's not proprietary and I'm not breaking any rules. And then I added a 17 simple here as well. Down here, I have the ability to call in whatever color. So let's add a 21-day EMA. Why would I add a 21-day EMA? Because I think Mike Webster is the cat's meow. I think he's brilliant, and he's always talking about the 21-day EMA. So I'm going to double click it. Now I'm going to close it. I'm going to hit that gear, and I better see another simple moving average down here, and I do. Now I just got to make it 21. Perfect. Then I'm going to come down here and I'm going to make this blue because that's the color I like. And I'm going to I'm not going to kill it. I'm going to make the 17-day purple. Now, you might be wondering, but Jeff, why does it say 9? I think it stays 9 until I open it up again. And now it's incorporated the change. And then I want to show you something else that's kind of interesting. Let's add a WMA. Down to price. Let's highlight it. Let's click it open and let's make it 30 so I don't have to go back and do it in the program. Now I'm going to double click. Now I'm going to shut that. I'm going to open up the gear. And it's a 30 period WMA. And I'm going to go in here and I'm going to make that yellow. And I'm going to make it extra thick. Now I'm going to hit OK. So Ian taught us the 17-day simple moving average. Mike Webster uses the 21 exponential moving average. Stan Weinstein used a 30 period weighted moving average. Do you notice you can't tell them apart? Yes, they will separate from time to time. They're almost all the same. That was the point of what I just did. So let's go back in and let's hide the 30 period WMA. I click in there, that will hide it. I hit OK, it's gone. So I used to have people not complain, Jeff, why do you use a 17-day? No one uses a 17-day. Ian did, that's why I use a 17-day. I don't actually, yep, 17, that should be green. We just change the color so it matches up everything else that I do. By keeping things consistent, when I open up one program or another, I don't have to worry. So I've got the 17 in green, the 21 in blue. They're kind of the same. I've got the 50 in white. I got the 200 in red. I want to have automatic trend lines. Should have them. I do. Maybe there are no trend lines popped up here. I thought there were. All right, well, do I have them hidden? Oh, there they are. So now I've got my trend lines coming in. Clutters it up, but you can see I'm running right up a number of trend lines here. The dashed is after the last touch. If it touches it again, it'll turn solid again. So they're all going to terminate in dashes. We keep them extending them for a while after they fire. So that's what you see up here. So I'm looking at the NYSE. I pulled back into the 21. Trend line support and moved up. That's a bullish looking chart. I'm sorry. Volume, I think our data vendor is weird on NYSE volume. I don't even look at that. This window here, if you put your chart on, it says above the MA 2050 200, and it's the NYSE. So I basically have three calculations. I've got one line that's showing me above, well, I have to go up here. Show you which one I think, above the 2050. Up. How did I, oh yeah. Up here, so dumb. I've got three time frames, time period 20, time period 50, time period 200. You can flip and pick whatever you want from an index. And then I've asked how many stocks are above their 20-day moving average, 50 moving average, and 100-day moving average in the NYSE. And I plotted it. Why? Because when the market hits a high, you're going to see that it's going to move up to the top. And when it hits a low, and you're going to think about getting back in, it's going to be on the bottom. So it's an independent, slow as molasses, overbought and oversold tool. Here is plotting out that new highs minus new lows. Notice when the NYSE was running up like a growth stock, you hardly had any red. And notice how high these moves were. Okay, that's a very strong move. The next thing on that list is just the AD line. And I'm not sure this is the best way to do it, but it just tells you it's a positive or negative on a given day. And then here is the up-down volume. Did you have more volume and shares up or more volume and shares low? And when you're in a bullish market, they're not as constant as the new highs and new lows, but you don't want to see many days in a row of negative up-down volume. That's all those are. None of those are proprietary. They're all things that other people use and they should use. This here is where the bacon is made. And this is where we have Eureka's. Remember, I found it now that we know what it is. Hey, Robert, thanks for being here. You'll get the recording. Hopefully you find this is helpful. And I know I talk forever. That's why I said people will go to one. But thanks for being here. And thanks for being part of the family. So Eureka, is that exciting? Phoenix is bad. Playing around with a couple different Phoenixes. Bingo is the baby out with the bathwater. Bango is excessive buying, exuberance, or selling. Hindenburg omens. The defibrillator, which you'll only find in here, is our bullish equivalent of the Hindenburg. And then the Zweig thrust I've been playing with, again, like the follow-through days. I'm testing whether or not I'm allowed to have them. If they're considered proprietary, they'll come out. I think it's okay because everybody else uses them, but I'm having added diligence now that I brought John in just to be careful. So all of those things are here. So let's go to a date that matters. Let's go back to April 7th, 25. So I have a market. Yeah, let's move a little bit to the right. Choppy market here, but it's above the 200. This is kind of a sideways crappy market. This is what markets usually do, by the way. Getting these long bull runs is great, but you don't expect to see that. So here, let's go back. Let's go back to the beginning. We had a bunch of Hindenburg omens firing on the left edge of the chart. All right, again, you don't have to have a big pullback. We ultimately went higher and then rolled over. These X's here are bangos. If you highlight anything, it will tell you what it is. Because I sometimes my mouse is too small. My mouse is very big here, and that may make it difficult to see what it is. But you had bangos, so exuberance. Then you had the market sold off, and these green pluses are the bingos, baby out with the bathwater days. As I said, it doesn't mean it's the bottom, but you're getting close to a bottom. And then the market really double bottomed, started to come up as it got higher, and it got no exuberance here, so nothing's firing. You had a couple of bango days, so really big buying days came in here. And then we got our next series of Hindenburg omens, so it's time to be a little bit concerned. Market sold off a bit. Again, most Hindenburg omens are going to be 2, 3, 4, 5% sell-offs. We had two Eurekas. What I tell you about Eurekas at the bottom? Bullish exuberance. The market popped a little bit. Didn't go far. Went up to the 50. Support and resistance. And then this is really bad. It had a phoenix. So now I'm getting a little bit more nervous. So that phoenix predated the big sell-off. Market had some really horrible down days. But remember, we're in the setting of the tariff crisis. The market had already come down quite a bit by the time we had that phoenix. So the market has come down. My stocks above the moving averages has bottomed. And if I look back to the left, I can look back years, and I knew that that was significant. My new highs minus new lows are 632 negative, 621. You got to go back a long time to find numbers like that. Exuberance to the downside. AD line is very negative. Up down volume is negative. So I know we're an ugly market. And then on this bar, I get a baby out with the bathwater, a bingo. On this day, I got another bingo. And then I got a phoenix. What does it mean when I have downside exuberance after a big sell-off? It means, holy Toledo, Batman, we're probably getting to a bottom. And then what happened down here? Forgot to tell you about this. This is the 13-week new high, new lows. And again, lots of settings in here. You could pick which index you're looking at. I like the 13 experiment. What's his name? Matt Caruso. I'll be at his meeting come, I guess, November or October. He likes the 5. And he showed how even in a good market, there are some days when you buy the good stock and it just doesn't go up the next couple of days, and then it turns around. And everything was good about the stock, and then he looks at his 5-day new high, new lows, and he calls it the FOMO indicator. Same thing, just I'm slower. And when I get to a bottom, I'm usually going to see a quick reversal. When I get to a top, I usually see it come down. So we go back to this period of time. My 13-week is at the bottom. Look at it every day. So I had this baby out with the bathwater. Guess what I got the next day? A Eureka. Now I wish, let me see, I haven't asked this question. can I add a kahuna? I should have kahunas in that, and I don't. So I'm going to have to create a kahuna indicator. Praveen's on when he listens to it, so that because they all come together in the dots. But I want to add the kahuna in here. So this eureka, which occurred as my new high, new lows are at bottom, my stocks above the moving averages are at a bottom, exuberant buying at the bottom, and this occurred on the 9th. I got excited on the 7th. Maybe I was before my time. But you know what? That's the low of the cycle. The bottom was in. Got the eureka. Now, again, there are a couple of things that I'm going to have to call the creators and make sure I'm not doing something nefarious. It's not going to show you on this one. I thought it, all right. It shows on the spider. Let me just look at this. Hold on. We do have a follow through day indicator. I thought it would show. Oh, I got it. Never mind. Here's where the follow through day came in on the 22nd. So you missed a few days of opportunity. Here is the defibrillator. But Jeff, it's late. No, 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 no. Because you can't see it worth a darn. So let me go change the color. I change the color to black so I know we'll see it. Then I got to change it right back. We had a defibrillator on the day that the market rallied. So the defibrillator is only available here. And it's Praveen's own invention. And I remember he called me up and he said, I found the reverse Hindenburg signal. And dang if he didn't. And then here's the Zweig thrust, very popular. Correct. It did follow the same day as the follow through day, but it also fired in this day right here. So it gave us a very early signal, calculated totally different. And here's the Zweig thrust. Yeah, in reality, if you had bought on any of those days, you would have done just fine. But you would have done finer if you bought it on the day after you saw the defibrillator. So I feel that I've taken Ian's work and added a few things that make this even better than it was in Ian's days. I always think support and resistance are good. So I'll put support and resistance automated lines on the charts. Here's the wedge with the breakout of the NASDAQ. And I'm looking at this every day. And it's easy. Well, it's easy for me because I've done it for so long, but I want to make it easy for you. That is market breadth. I have a second market breadth that I put together here. And I've got the spider, S&P 1500, the NASDAQ, and the Russell. Remember, if you create something, this is the AD line, make sure that all the components are going to be the same as your index. And, you know, I remember Bill made a comment about how I was the only person that put out anything about any kind of bullish feeling when we're pulling back in here. And what I put out there was, look, we got higher lows on the AD line, and we're going nowhere on the stocks. That's actually bullish. Hence why you see those white lines drawn on the chart. So you have the 13-week, the stocks above the moving averages, the AD lines, and the RSI. What I really do is I look at this for 2 minutes to make sure that none of these green boxes here, which is that 10-week new high, new low, okay, Pat, I think I did. In the beginning of the PowerPoint, Pat asked if I would share the things that I just did. So I put these are the ones that would let me share. So here's my market breadth and the new high, new low codes. They'll be in the in the handout that I stick there. Cool. Thanks for asking. Um, so I'm looking at this 10-week new high, new low, 13-week new high, new low every day. If it's above 0.95, I expect the market pulls back. Not a lot. It's always going to pull back when it's that high. Up here, went sideways, pulls back. But I'm looking at none of these are, this is probably, what is this one? 0.94. So if I don't see 0.95, I'm not worried. If I don't see 0.05, I'm not worried. I'm just looking for extremes. Nope, they're the same. I don't think I added anything. I want to add the kahunas, but I got to make it a separate indicator, not a package. All right, that's this one. Then the other thing that I use a lot of are ratio charts. We want to put an RRG chart in, but I got it again. That one I don't think I can put in because when I searched in RRG charts, um, when I searched for the RRG charts, it said they're copyrighted. So, because I'm finding a lot of programs are putting them in, and I don't want to be left behind, but I also don't want to go to court either and write a big check. This is a pure ratio chart. Good. We're going to have 1 hour left to go over this stock hunting. So time-wise, we're good. Each of these are the underlying. I've created a ratio chart. So let me just show you on something that I can screw up. Let's make a new layout just so I don't screw anything up. I'm thinking we got a bug on this new layout that I just noticed today. You may not have it. It may be in my beta because I cannot get rid of the radar screen. I don't want the radar screen. I just want a single chart here. And I want to create that layout. So I named it. I chose no scanner. I chose single chart, 255 bars. There's nothing to sync. I hit create, and then it should show up as test. And I don't know why it takes time. Sometimes it takes more time than others. Yeah, see, it's not giving me the full bar. I don't know why, and I don't know how to change that. So I'll have to ask Praveen. What I wanted to show you here is how to create a ratio chart. I want to look at how Apple is doing versus NVIDIA. So I type in Apple, okay, and then I hit the dividing sign. And then I type in NVIDIA. And then I should give me a ratio chart. May have done that wrong. I'll go back in a second. Look at that one more time. AAPL, do this. I think what I did is I probably need to. Oh, I think what I have to do, unless it's broken. Yeah, I think I got to talk to Praveen. It's supposed to. All right, well, that's all you're supposed to have to do to create ratio chart. All right, I'll put that on my list of bug fixes. All right. Well, by the way you set up the chart, typically that'll give you a ratio. A ratio chart, these are all ratio charts, so they're all comparing what it says in the box versus the spider. I'm looking for leadership. Back on July 3rd, technology was still leading. The leader has a white bar. It says it's up today, and it's pointing up towards here. So this was back then. it would have been pointing up there. The thing that's the weakest is the thing that's living down or pointing down. So when I look at the market, I can see technology has recently rotated away. It's not horrible. Healthcare had a really bad day on Friday. You can see that red bar there. Energy may be coming back. Um, you know, financials had a little weakness. Our materials going to come back. Our communication's going to come back. It's hard to see much from right here. And it's comparing the relative performance um, of each versus the spider, which neutralizes their various prices and allows me to look at what's working. Well, we know Bitcoin's been sucking, and you can see it's pointing down here. I added today, because I was just curious if I'll get much value out of going and looking at, no, there's no way you can see anything there, but I took the 11 sectors. All right, Jeff, give it time. Take my hands off. And you can see I had the same issue where I couldn't create it without having the screen. Got to talk to Praveen. A lot of times I've now learned as a software company, you change things to make them better and something unrelated happens. But what I was going to talk about here is I wanted to put in each of these, I thought these were put sectors. Oh, are you just going to be sick to me today? All right. When I built it, I wanted just to build out each of the sectors. And just so I could look at sectors with regular charts instead of just ratio charts. And I think they will be helpful. This is kind of an interesting coiling chart here, isn't it? And then we'll talk about this in a moment. But you got a coiling chart. Be interesting if this breaks out. That could be really powerful. All right, let's go look at the JAS layout, because that's the last piece of my nightly review. And it's where I go hunting for stocks. So let me just show you what's in here, because one of them you won't have if you have Market MRI Pro. What happens when you do the upgrade? And remember, hard sell Jeff here. I'm not telling you when the upgrade period ends because there's no reason for me to end it. So I'm not hard selling you. You get access to all of John's things. So when you get Sweeter Trade upgrade, you'll notice you'll have a new category, which is, well, you have John's McOscillator, but you have his JP indicators right here. So you can combine your own chart, combining third-party stuff that's in the program, meaning standard like stochastics, MACDs, my stuff, John's stuff. So I've got a John Person buy signal, PPS buy on my chart. So I come into this layout. Up top is the high-low jump. Another Ian tool that I think I made better. Ian said, let's take something that's in a big uptrend. Let's look at, well, SanDisk wasn't a big uptrend. It still is, technically. And let's look at SanDisk on this date right here. Oh, it's not old enough because it was a re-release. Let's look at Micron. I need 200 days of data for this to work. Let's look at Micron at the peak. When I highlight Micron at the peak, up top, you see it says high jump. It says 96.97. That's a signal. What does that mean? Here's what it means. It means that if you take the price minus the 17-day, the price minus the 50-day, the value, and the price minus the 200, and since the price is above each of those, it builds upon, you get a very big number. That gives you a measure of extension. Then I want to take that number and I want to look to the left and ask myself, has it ever been higher than this amount? And you'll find the time when it was higher, and you'll look back and say, oh, it pulled back. Because what it turns out is When you get above 95, it means that you are the most 95th percentile of extension compared to the most extended you've been in the last 200 bars. Now, I don't think we gave a user variable on that, but let's just check, because maybe we should. Yeah, right now the high jump is going back to 200 bars. I'm going to put in a user selectable, so if you wanted to look back 5 years. Why? Because remember the comment, it's never different this time? If you're the most extended that you've ever been in the last year, you're probably not going to get a whole lot more extended. You are going to revert back to the mean. So that's what this is. Now, how did I make it better? Let's pick something that's been in a downtrend. What's a crappy stock that I don't own? I don't even know what's in a downtrend. Well, silver is in a short-term downtrend, SLV. You notice it goes to minus 100 on the downside. So what I'm doing is taking price minus the 17, adding it to price minus the 50, adding it to price minus 200, and I'm comparing it to what it's been the last 200 bars. Well, if price is lower than the moving average, price minus is a negative number. So I added 3 negative numbers and I looked to the left. So right here, I was minus 100. That was the most extended to the downside that silver has been in over a year. And guess what it did? It bounced. Let's go to the crazy day. What do you think the high jump was here, guys? 100. The day before, it's 100. You got to be ready for a pullback when the high jump gets to 100. Now, doesn't mean it's going to fall that day, but you tighten up your stops and you expect it to reverse. High-low jump, very useful tool, if I say so myself. Bongos. There's 2 bongos here. You can tell that when the colors are different. The top is the daily. The bottom is a weekly. Silver has been in a weekly downtrend ever since it sold off. When you see the blue come in, this is a retracement in a downtrend. Shorting opportunities. Retrace when it converts back to a new downtrend. Down here is volume. It's funny, I mentioned how much I like Webster. And he does not like volume anymore because of dark pools and various other reasons. He says he doesn't use volume. Now, I believe everything he says. I just can't believe he doesn't use volume. I still like to look at volume. Now, John really, unbalanced volume he didn't create it, but for the longest time, John was calling out how volume wasn't working and that he was using unbalanced volume. Well, John doesn't do unbalanced volume anymore. John created his own volume indicator, which is the John Person. Thanks for being here, George. The rest will be on the video, which is a person volume histogram. Well, now that I have John's stuff, I may change that out. But I've got unbalanced volume. And then here is a very different way of looking at relative strength. And this goes to one of the HDSIers, Chris Wilson rather, who one day told me, hey, Jeff, look at this. If you buy when the relative strength ratio chart versus the spider crosses over its moving average, it's a good time to buy. And you stay long until it crosses below. And when it crosses below, it's a good time to short. And you stay short until it crosses back above. Oh, well, I think it's even better when you look at a higher time frame. But that was really cool. So I incorporated that. And then this here are my impulse dots. One of them I'm not telling you yet because I'm testing phase. Remember I said I get a beta version, which may not be good today because the beta version has some issues. All right, here's what's in my chart. I told you about the high-low oscillator, and you'll find in the PDF will be all the definitions. Here's the bongo daily and weekly, my moving averages. We'll talk about seasonality in a minute. Relative strength, which is a derivation of what you might find in IBD. They don't tell you what they do. So everybody tries to do something similar. Relative strength comparator. I've got mine turned off right now in the chart. And then I've got 10 dots. Now I've got 10 spots for dots. There is no dot 8, it's blank. There is now a dot 11 that I'm doing testing on that I don't think you have yet. These dots represent a green candle low and a red candle high, derived by David, the guy with the mobile breakouts. All right, red candle high, green candle low, single candle reversals. Then definitely not mine, Wilder PSAR. Why? Because some people use it as a buy-sell indicator. Normally, you're going to see it plotted on the chart, and you're going to look for it to cross above or below price as the signal. I just plot it down here. Blue means it's below the price. Red means it's above. Then you have the squeeze popularized by John Carter, but apparently it's from Linda Raschke. And what John did is he put a rate of change indicator in it and called it TTM squeeze, which is probably the best selling indicator of all time. Well, all the squeeze is when the Keltner channels and the Bollinger channels are put on a chart and the Bollinger bands contract so they're inside the Keltner channel. That's a squeeze. What does it mean to me? A squeeze is taking your slinky with your grandkids and compacting it and letting go, and they get all crazy happy because it starts flying. Yes, you can on the high jump carry, but I'd probably look for greater than or equal to 95 or less than 0.9, negative 95, and I'll try and remember and show you how. So the slinky, coming out of the slinky, out of the squeeze, is when the stocks move. These green dots as squeeze release, so I can scan for the first 3 days after you come out of the squeeze as well. Not rocket science. First dot is a momentum dot. Second dot is a breakout dot. Third dot is a volume dot, and these are all extreme signals. And a fourth is a gap up dot. Then you have nothing, and then you have two different moving average crossover systems that I have used in various time frames as trading systems. And I'm just curious, are they being bullish or bearish? If I'm saying go long, what is the trading system doing? One I call the CPR, which is the dots. And actually, I think the EMS is the 10th. So I broke these up. Wrong. EMS is on top. The CPR is number 9. I'll fix the slide before I send it out. So that's what my chart is. And it says it right here. At work, I use an EKG whose impulses gave me information on a piece of paper about a patient's cardiac health. The dots give me the general health, the ebb and flow of a market, and can help me find my setups. All the definitions. This is if you're a Metastock user, the same chart. If you're TradingView, you can have access to the same tools at no charge if you own Market MRI Pro or SweeterTrade. I talked about the relative strength in the OBV and how I use them. I look for divergences. This tells you what the dots are, gap and volume, breakouts and momentum, high-low oscillator, how I got it. And now let's go back into the program. Had a very good question about creating a scan, which we'll do in a few minutes. I am a top-down guy, so every day I am going to come into this panel. Am I long or short? I think I'm cautiously optimistic that this market's got a run coming. I don't disagree with John. I'd be hard-pressed to publicly say I disagree with him anyways. I would need some Hindenburgs and a Phoenix and a few other things, which we may have already run through and come out of the other side. Um, so I'm still thinking long. So I'd come in here and I'd rank by percent change, perhaps. So let's rank them by percent change. And let's look at cyclicals, defensive, and materials. Man, is that boring shit, excuse my French. But that's what led on Friday. Now, since Friday was a rotation day, I might say, now let's rank them differently. Let's look at what's been working over a longer period of time. And maybe I'll rank it on a 2-day momentum. And what I get is cyclical, materials, and tech. These are the industry groups for those sectors. I could have ranked by percent, and I would have gotten very different things. Now let's rank these by FM2. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These are the top 10 industry groups by 2-day momentum from the top 3 sectors, and they give me 359 stocks. I don't, and I know somebody on this call has done well with lower volume or lower price, but just to make my life easy, there's plenty of stocks out there. I want them above $5 and above 500. So you'll notice the 359 becomes 220. Now I could be crazy and just go no, no, and go through one at a time and see if I can find anything I like. Nah, I'm not going to do that. I want to rank them. So I could rank them by percent move on a given day. What I find is what comes to the top are things that are had really big moves and might not be things that I want to buy. All right. But that's very valid to do it this way. And there are some here that I love this pattern. I talked about it last night. I think Crocs looks very viable here. You've got a nice uptrend. You're above the moving averages. You have trend line support right underneath. You just took out a trend line here. Earnings are not to July 30th, so you got a couple of weeks if you wanted to play it. I like breakouts from trend lines. All right, so you would have found that. Etsy, from the dead. Look at Etsy. In fact, one of the things I really love about what we built, you click on that, you bring up the fundamentals. It's going to have $1.17 versus 25 cents. It grew 93%. Is this now a box 7 stock that is coming out of its doldrums? I don't know. There wasn't a big bump up in revenue, but Etsy looks good. I haven't said the word Etsy and buy since before COVID or during COVID. So there are some things. NVIDIA, pull back to support in a breakout, taking out a trend line right here. It's my favorite kind of buy. Then I look at relative strength and volume, they look good. And then I look at the high-low jump, I know it's going to be fine, it's 26. So I'm using all my signals. Now, I also will look at, well, for the longest time, I still do it. It's like, why do I want to look at anything except who's got impulses? So let's just go look at stocks that actually had a big move today. Well, Resi, I prefer buying breakouts, but there's a bounce off of support. There's support, automatic generated. It's got momentum in a breakout, good relative strength, coming out of a squeeze, buying off support, on. Looks okay. I mean, so I'm looking for stocks that have my impulses with the idea that the best stocks that are starting to move. I don't buy this one, it's well below 200, but it's moving. Will have the impulses. So often I'll just rank it by impulses. If I want to see crappy stocks, if I was looking to short, which I wouldn't necessarily be looking at the top markets, these are all stocks that did something that gave them, none of them have a lot of these negative impulses. Or I can look at that 2-day momentum, 5 or 13-day momentum, and just run down the list. This was beautiful. SanDisk. I don't think it's done. It might be done for a while. I'm not sure it is either. It had a person buy signal on Friday, da 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 da, and a bullish engulfing almost. It traded right down to the 50 and reversed. How is this not like Ian Magic? I mean, yeah, it's a buck below or something, but really, it reversed at the 50. Here is Wednesday, Thursday up to the 21-day EMA. It stalled, and Friday it broke out above the 21-day EMA. Relative strength is getting back to neutral, as is volume. Is this ready yet? I don't know, but it had a PPS buy. I think SanDisk looks interesting here. So I just, again, how you sort them is what comes to the top. So Seagate, that looks pretty interesting. AMD, and so I like support. I'll do it by percent change to see what really moved today. But sometimes I'll get things that are not buyable because they were up 800% and they went from $1 to $9. And I don't know the story. I'm not even looking at them. I'll definitely rank them by the number of up and down arrows. We're going to talk about these column heads in a second. And then 2, 5, and 13-day momentum. It is not the force index. Force index has a problem. And the problem is, if you look at today's close minus yesterday's close, times volume, and you plot it, and then you look for a 2-day exponential or a 13-day exponential moving average. Volume is a multiplier. Bank of America may have 30 million shares a day. Onto Innovation may have 1 million shares a day. What not 300 million or 1 billion shares on Bank of America. What happens is that volume dominates the equation. So I don't want volume. I want it to look at maybe how is it above average volume? Give it some points for that. Is it low volume? Give it negative points for that. So I created my own momentum. All right, and then relative volume. James Ropo loves to show the stocks with the big volume. I don't know how Praveen calculated it. There's a lot of different ways, but looking at the stocks that had massive volume. Now they could be massive volume and look really ugly because I'm not filtering for good stocks. I'm filtering stocks that something's happening, and you don't get these massive volumes probably without the pros. And notice SE. This was my stock of the year that somebody asked me for. It was funny. I was with my board members, and one of them, super guy, was actually in the Obama White House, and he still likes me, even though I'm more conservative than he is. And it was December 24, and he goes, "Well, what stock should I buy and hold?" He had just sold his company. And I said, "I don't know for how long, but I really like SE here." And SE had a major run from about 100 up to 193, and then it did what it's never different this time. It came right back. Is SC getting ready to run again? Got to get above the 200. I don't like that. It's a shooting star. So that's how I use this. Let's say you come in. Oh, I only want to look at healthcare. Healthcare. I don't think that biotech sell-off is going to last. By the way, I'm making this up. I did not say that. So I'm going to click healthcare. I'm going to find biotech. And these are the biotech stocks. And I'm going to rank them by relative volume. No. How about by up dots on a disaster day? Which ones look good? AARD, this is a cheap stock. Why was this up a lot? Well, I could look up here and see, do we have any technicals on it? Nope, it's too young. Darn it. We have any news? Yep. So I got the news, and it tells me what news is going on. Well, here it had investor scrutiny after a drop, so I can't figure out what's going on here. Did they, maybe what happened was they had a hold on their study, which means the FDA saw something that scared them, and maybe they got their hold released. Was there a press release? Nope. Was there any Capitol Hill trade? Nope. So there's a bunch of things up here with this guy, which is the news button, and this guy, which is the earnings button. All right, help. Well, in a bad day for biotech, uptrend pullback and a breakout. It's not really a cup and a handle, but I could pretend. Funny looking cup. I wouldn't want to drink out of that cup. I'm not saying these are good. Tracks, fat. You know. So, I mean, again, the point of this was not that these were going to be good stocks. This one, maybe. It was about how I could dive deep into an industry group. And I'll also be brutally honest. There remains no better tool for doing what I just did than HGSI. But HGSI has a tough interface. And my point for this piece is to show you how I do it, but the entire product to make it more usable. Impulse. And then I just want to call out the pieces here so you know what they are, and then show you some of the real power tools. Symbol is obvious. Last is the current price or the close. Change in percent. Up and down. Let's make these bigger. Nope, it won't do that. Huh. Well, up tells me how many impulses are up. You can have 5, I think, is the max. How many impulses are down? The impulses, momentum, breakout, volume, gap. Age, bongo. Age is a daily bongo. Weekly is the weekly bongo. If it's green, it's in a buy. So let's pull up X4. All right, now I'm going to drop, well, trust me, it's green. In fact, let me show you. You can see it's green for all these things. So when it says 3 dots, there's my 3 dots, momentum, breakout, and volume. It says down dot 0, age 1. That means the current bar turned green or blue on the daily bongo. It did. It says that 19 bars ago, the weekly turned positive. Well, you're going to say, Jeffrey, that's a lot more than 19 bars. Sure it is, because it's a daily chart. If I put the weekly chart on, it probably is 19 bars. Okay, go back to the daily chart. 2, 5, and 13-day momentum, mostly just for ranking. Relative volume, but OBV. It's green and it's 20. What does that mean? It means that price, the result of OBV is greater than its moving average, and it's been above it for 20 periods. This one is red and a 10. That means the volume is below the, let's go look at it, below the moving average for 10 bars. Well, it's about 10 bars and it's still below. About to cross. All right, and let's go back up to where we were. And now let's look at these two. Relative strength is a 1, and weekly relative strength is a 1, and they're green. Without looking at the chart, since I know everything's green here, let me just tell you what this chart's got. It's a cheap stock. It was up 11% today. It had 3 of my 4 or 5 dots were positive, no negative dots. The weekly bongo turned blue today. The daily bongo turned blue today, which is bullish. The weekly has been bullish for a long time, so this is a pullback and an uptrend resolved. Uptrend, pullback, resolved. Then I go over, I don't skip these for now. Volume was nothing impressive today. And then the volume, OBV, has been positive for 20 bars, meaning it's above its moving average. Today, the stock's relative strength versus the spider rose above the moving average. Remember I said you buy it when it crosses above and you hold it till it crosses below. It crossed over today. And then it also crossed over on the weekly today. So I have hard to see on the weekly. I think this is maybe I can, this might be a trust me. Oh, maybe I'll get it. I can see it. It did cross over today. I knew it crossed over today. It doesn't lie. So yeah, the chart matters, but that's why this is so powerful. It just told me what's on the chart. So if I wanted to create a scan, all right, now we're going to start talking scans. I want to create a scan. So you notice this filter right here. Watch what happens to this line when I click that filter. I open a new line. For everything here, I can now create something. So if I wanted to find one symbol, I want to find mosaic. I type it up, it's going to come right to the top, and then all I got to do to see mosaic on the chart is to, well, should be, I just would have to click on it. There might be a bug or I might have done something wrong. But although maybe I don't have mosaic here because why are these? So let's turn off that. All right. So equals MOS. You know, something I should be able to get that to plot, but I'm doing something. It's me. It's not the program. All right. I can't remember what I'm supposed to do. All right. Let's back out of that. Take MOS out. All right. So I'm going to create a scan right now. And I want to kill that. All right. So I only want stocks that are greater than or equal to $5. Oops, I got to add something. Hold on a second. I don't know if I could add it to this one. So I could answer a question at the same time. So I opened up the column chooser. This is only going to give me my columns. It's not going to give me John's column. So I will show you to do that in a second. The question was high jump and low jump. Thought I had high jump and low jump in here. All right, I do in other products. I will talk to Praveen, and once I have a column for high jump, then I could add it to the list here, and then I can search on it. Yep, that's a miss. Thanks for asking that, because I would like that too. All right, so Praveen, I don't know if you've joined. I'm going to make him listen to all 3 hours so he can hear all the things he needs to do for me. So let's add just for grins, relative strength rank, and it showed up here, and we'll just leave that for right now. All right, so I want to have the last be greater than or equal to 5. I want up to be greater than or equal to 1. You can see they're populating down here. I want down to be less than or equal to 0. I want age of the daily bongo to be less than or equal to 9, meaning I want something that recently flipped to a short-term buy. There's 9 down there. I want the weekly to be at least 1, meaning the weekly bond goes up. And you can see we're limiting the number of stocks that are meeting all these criteria. And then I'm going to come over here. I want OBV. It's not the greater than or equal to 1, so OBV's got to be positive. I want daily relative strength to be greater than or equal to 1. Weekly crosses after daily, and I want relative strength break to be in the top 80%. I just added that, greater than or equal to 80. And now I should have found a list of stocks that meet these criteria. Right here, you can see what they have. It's last is greater than or equal to 5, up greater than 1, down less than 0, less than or equal to 0, age, meaning bongo less than or equal to 9, so they've all reversed within 9 bars. Weekly bongo is positive, at least 1 bar. OBV is above the moving average. Relative strength is above the moving average. And relative strength rank is 80%. I hit apply, I hit OK. And then one of these things will let me save it. Now I'm trying to remember how I save it. I don't do it this often. Oh my gosh, I know I was, oh, you go up here to the disk. I always do the same thing. So we call this webinar leaders scan. And then now it's going to show up. I'm going to turn this thing off. And I'm going to delete that. I got back to my, this is just one sector. That's why there's so few. So let me go back to the top down and unhook healthcare. So now when I go to the impulse, I'm back to 3,600 stocks. And now we're going to find what we just did, which was called Webinar Leader Scan. I'm going to click in it and apply it. And these are all the stocks, the 85 stocks that have my criteria. Let's rank them by FM2. And let's just see if we got, this one is interesting, but weird. AMD, KB Financial, look at that breakout. Woof. Credit Corp, Crocs, Cake breakout, Penske, GGAL. You notice how many banks are showing up? There's been a lot of foreign banks on my list of interesting stuff. So look, did I just create a scan that's finding things that are in uptrends? Yes. Are we finding things? Now, why did it take this blue? Oh, because it's less than 9. Okay. I've got to fine tune the bongo so it's greater than 0, meaning it's green, but less than 9 because it captured this one because it's less than 9. So this one hasn't flipped yet, but I bet it flips tomorrow. So all we did was I did create on the fly a simple scan that finds things. So we did a webinar not long ago, and in that webinar, we created the rockets in flight, and I think everybody gets that now. One of my favorite things to do is to open up the rockets in flight list. If I click in the box up at the top, it highlights the list. If I click here where it has the gear, it basically makes a chart from all the symbols in the list. And I ask, do you want your portfolio to look like that? And the answer is, of course we do. So why don't you go fishing where the fish are biting? So let us look at perhaps this list. What I'll do now, I love this new thing. Trendline resistance breakout. These are going to be where there's some action. Meta broke out over trend line. Meta caught me with my feet flat, but I did say back here, I might be interested when it takes out the 21 day here, then buy more when it takes out the 50 and beyond. Right? I also think if we look at Meta, I just got to do this. I'm thinking, is that Meta? Let's see, somewhere down here. Tesla. Oh, where's Meta? Oh, there was Meta. It was because when it gets above the buy sell line, the 30 period WMA, that's what the box was there. I kind of figured that because I wouldn't do it necessarily just a 21 day. Go back to the JS layout. Um, so now impulse. So I've got the 3,500 stocks. So what we're going to do is we're going to go back to that. We're going to click rockets in flight, and we're going to go down and we're going to find the trend line resistance breakouts. Combine the two. Let's just go through Meta, Jackson Financial. I looked at this last night. Just don't like that close. Crocs, there it is. I mean, I can't believe I like Crocs to buy. Nvidia, maybe best time to buy it in a while. Iron Mountain, or no, it's Mountain Vale Resorts. I don't like the topping tail. Arista Networks, this thing just goes higher and higher over time. Put a monthly. That's what I mean by higher and higher. Is this a leader? Absolutely, and it just broke out. ANF, not what I usually consider a leader, but breaking out. CDW, computers. Best Buy, hard to believe, especially since the price of computers are so high. Even I have stopped buying them this year. Teleflex, I don't know much. CHRW. So it's a list of stocks that meet certain criteria. Corsair gaming material. So I run these scans. So let's just talk about what I wanted to mention. This thing here, if for no other reason, I go back to the comment, why did I want this program? I wanted this program, excuse me, I wanted this program because I wanted to be able to do my scans before the market closed. So consider everything in this drop-down menu. And if you don't have Sweeter, you won't have John Person signals as well. And that's where we're going to go next and end up. Everything in this drop-down, whether they came with the program or they were created by me on the fly, okay? Everything in this drop-down is going to be a scan that's running constantly in the background, updating way too fast, using up too many server time. But we haven't figured out what the right answer is. So let's say I wanted to know during the day were there any A pluses. There haven't been a lot lately. But there you have your buddy Crocs. What's the A plus? It means you got two momentum dots in a row. It requires relative strength and OBV to both be above their moving averages. And I think there's a high jump number less than 95. But that's one of my favorite scans for finding stocks. The JXN, that Jackson thing with this, I don't like that topping tail. And PBI, there's no way I can buy Pitney Bowes. I just think of typewriters and cash registers or whatever they do. Boring. Maybe they do something for data centers now. I highlight it. And let's see. Shipping and mailing services now. Tech, logistics, financial solutions, pre-sort division. Well, I guess they're not just making boxes anymore. Who knows? Boring old name. But right now, pullback breakout, nice uptrend. This here is the relative strength rank. The higher, the better. So it's a high relative strength stock. And you can see relative strength in OBV. That's why it's there. I wish we didn't have to know the name of the stock we were buying because I would be a much better person because I only buy things if I think a lot of things the name scares me out. Like Crocs, I wouldn't wear their shoes. My little granddaughter wears their shoes. It's like a has-been name. But look at this. And again, check fundamentals. It's going to do 430 versus 423. That's kind of flat, but that's a turnaround because it's been negative. Revenue's kind of flat to where it was the same quarter last year. It doesn't pay a dividend, but the stock's had a big turnaround. And if you go back and you look at over time, grow on a monthly, definitely is a turnaround. Hard to see with all those things that light up there. All right, so one of my favorites is A plus. One of them I like is the A. And Crocs, A and F. I mean, this is too far. Actually, this is one I really like. This is one. This was an Argentinian bank. And again, I don't know the world enough to know if these are safe or not safe. Pays a little dividend, 35 cents a share. 35 cents coming in versus 13, big earnings per share growth. Revenue, no, but sometimes they sell a division and that explains the drop in revenue. Stock's in a big uptrend. It took out trend line resistance. And then this one last night, like I want to buy a Mexican grocery store. But, what a great looking chart. You took out double tops, ran up, you gave a flag, and you broke out of the flag. So the scans really are designed to help you. Let's jump into John's stuff. All right. I don't know why I did that. All right. On John's stuff, which is what we're looking at, to me, and again, John is so much better with his stuff than I am. What I have become enamored with over the years, I mentioned before the daily PPS buy. The daily PPS buy, I got to pick one that's on the list, to me is a reversal signal. No one knows everything that's in it. He doesn't share what's in it. He doesn't have to share what's in it. But if you look at a number of stocks, you'll find that when you initiate a downtrend here, and he's got so much stuff in it. When you initiated the downtrend, you got the signal up there. And when it flipped to maybe a new uptrend, you got the signal there. So I think that triangle is a nice add-on to what I do with my stuff. In fact, what I started with when we went to this was I actually built it in. So not only does my Mexican grocery store chain have a nice uptrend pullback and a breakout, and it's a high relative strength stock at 91, it just tells me 91 right there, had a John Person PPS buy. So I watch for PPS buys and sells. And I'm not going to go into TradeStation today, except to say that I speak with what I actually do. And every night I'm running a bunch of John Person buy and sell signals. And this is the things that click off on me, and maybe it's me, but it doesn't matter which computer. It never makes it through all the scans without me having to restart it once. Let's go back there. So I'm a big fan of his PPS buy and sells. So I could get a list of them. Now, in our 3,597 stocks today, we had 243 new buys. And let's look at new sells. And 198 new sells. That's kind of neutral, isn't it? Yeah, it's favoring the buys, but it's neutral. In a rip-roaring bull market, you might be 10 to 1. So I start with the PPS buy signal. I mentioned before, I don't know if it was the other night on my video or today, that his high close doji by itself is a pullback in an uptrend signal. Here is a high closed doji. So the market ran up sideways to downtrend. You had a doji here, and there's a specific definition of a high closed doji. It's related to how many bars you can go, and then it's a close above the high of the doji bar. And then there's rules that John has of if it doesn't happen within so many bars, it's no longer active anymore. So I'm going to scan for every night or every weekend, weekly high close dojis and PPS buy signals, because I have found that when they occur at the same time, it's typically a nice time to buy the stock. So let's go in here and let's look at the daily PPS buy and a weekly high close doji. Small numbers will come up. BN. Share, can you get it? So pull back, I guess, yeah, you're closing above the doji, the high of the doji, and a buy here, not that exciting. One of the problems with every program is the definition of a high closed doji is in a downtrend. This isn't a downtrend, I don't even look at it. But then I saw this one this weekend. And again, we're not talking about semiconductors. We're talking about shoes. But I don't know if you remember when I did that top down and I picked the top 10, especially by percent change, apparel footwear came to the top. So combining a high closed doji, which is, I think, his most bullish signal. And if I remember correctly, Trade Navigator, somebody sat in one of his meetings. I'm just trying to think of the story that John loves to tell stories, so do I. And so sat in my meeting, meaning John's meeting, and he heard me talk about this. And either while I was sitting there or after he left, he went in, he programmed it in, he back tested it, and he found that this was the best signal that he's ever had seen. So I look for high closed dojis. Definitely over this time frame, it's a downtrend. We have a little breakout. In fact, there's probably, I don't want to mess up the chart, but why not mess up the chart? Broke out of a trend line. Now, oh, by the way, this is John's chart. But once it sits on my computer, it's my chart, not John's chart. It's John's indicators. Of course they are. They're very protected indicators. And I don't even know what goes in them. That's the beauty of having Praveen. But I could add trend lines. And let's see if they came in. Make sure I only did it one, not four, which I've been known to do. Trend lines, they're there. We learned before, now I got to update the chart. Look at that. I didn't need to draw it in because it's got, has my trend line and another trend line. So I much prefer automated trend lines than my trend lines. So not only do I have a weekly high close doji and occurring in a downtrend, and look at his volume histogram. Now, the relative strength isn't our friend here on the weekly, but that weekly volume is improving. All right. And then here on the relative strength, the person market catcher, it's actually improving here despite the stock pulling back. Volume has turned positive. Oh, look at this. Jeffrey's momentum, breakout, and volume fired. Isn't that interesting? The high jump here is nothing. I like on. Now let's go back in my big chart. Doesn't look like much, but it is got the three signals. Relative strength and OBV are both moving up. Going to have to get above the 200, which I don't love, which is why it's probably not on my buy. I think it is on my buy watch, but I like this. So this is how my mind is going. So what I look forward to teaching you in the next video will be to open up. Now I'm going to kill this one and do a new layout. I want, something's fishy here. There's a bug in it. I want the scanner on the top. I want to have 2 time frames. I want to link, not the interval. I want to link a symbol, not the interval. Yeah, this is supposed to, we got an issue that needs to be fixed. So now I'm going to create that layout. Let's see if it does it the right way. And again, yours may not be doing this. I always have a beta version. And having a beta version means I have things you don't have. Okay? But that may or may not be good or bad. Why didn't you come up? Here it is. All right. And of course, it put it on the, oh, it did. Look at that. It worked out fine. So what I want to be able to do now is, and this is just be your teaser for the next time we get together, is I want to be able to take whatever universe you want, and that impulse universe is the NASDAQ, the NYSE, and the Amex filtered for $1 and 100,000 shares. And then I want to come into this, and I want to have column chooser, and I want to make this big, and I want to start going crazy. I want to put in sector and industry. I want to put in relative strength rank. How about relative strength rank new high? I would love to put in trend line support touch, which means I pull back to a trend line and bounce. Trend line resistance breakout. And now the fun stuff. I can come down to John's stuff. And I have issues with some of the nomenclature here. There is a buy in here. What did he call it? I put in that weekly HCD and LCD. Oh, it's trend. Daily trend. Is it up or down? And was there a signal today? I just pick what I'm just picking things. I could put in weekly trend and weekly signal. How far am I from support on the monthly, the weekly? You put anything you possibly want that's in any of these filters. So I added all these up here because now, and this is what we're going to do next time, is we're going to create, we're going to do it right now because I want to do it for me. I want last, again, greater than or equal to $5. Now I want to have relative strength greater than or equal to 1. I want rank new high greater than or equal to 80 liters. Just don't know what the nomenclature here is. Oh, I may have to do some homework. Let's see, I don't know what the nomenclature is. Let's go back real. And then, but basically what I want to do is create the ability to create scans on the fly that reflect the things that you want. Obviously, I did something wrong because I got 0 stocks. So I'm going to learn the nomenclature on John stuff. I guess I should have looked first and see how Praveen is the trend, its number of days, signals a +1 or -1. All right. So there's going to be a way that you'll be able to scan create your own drop-down menus. Today you can do it by saying, give me this, this, and this. So we could just go, give me a PPS buy, give me a weekly HCD, and give me improving monthly volume. one stock on. Who knew? And then I could actually, but not in this view, store it. I think to store it, I'm going to have to be back in this view, if I remember. All right, I'm going to do a little bit more work so that I figure out what to use for his modifiers, because I haven't done them with his before. But the real power of this program is you're not stuck with what we have here. You can build whatever you want. And another one of his really great contributions to our success is this thing he calls the trilogy buy, and you get a small number every night. But you'll have to have him teach them to you because I'll screw it up. But there's a number of criteria to be a trilogy buy, and there were 30 of them last night, and Clorox. But it has to do with support, resistance, signals, etc. Heaven help us when these become the leaders of the market. All right, it's 1 o'clock. I think I'm caught up on all your questions. I appreciate you being here. I will fix the error in the PowerPoint that I was showing, and then I'm going to turn it into a PDF. Okay. All right, had a good question. Let me pull up this. Financial modeling prep is the name of the data entity for end of day and for everything that we use. You don't have to to see what's in it. You don't have to be an owner of it. I haven't logged in. In fact, I urge every one of you to go to Financial Model Prep, because if you see anything in here that you want that's not in the program already, we can bring it in. John wants the Form 13Fs to tell you which asset managers own what and when they bought it and how much. So we're building that into the system. It's going to cost us extra money, but John thinks it'll be a really valuable thing. You go into the documentation, and again, I can't, this is Praveen's world. But somebody asked the source of the earnings dates. It's FMP, which I think is the same source that HTSI used. Do I rely upon that? Heck no. I use earningswhispers.com, and if it's something I own, I'm probably checking their website as well. But if you go into this and you see something that we don't have as a field, or something that you think matters that we should be including, let us know. We'll probably bring the economic indicators, because if it's in this list on the left, I'm already paying for it. So easy to bring in. All right, guys, I'm tired. You're tired. I appreciate you all being here. I get to channel my inner Ian on these Saturdays. When you think of how much of what I taught you today came from Ian, it's amazing. And I got great mentors. Ian, John Person, can't do better than that. Thank you all, and I'll post the recording. I'll probably put the recording out on YouTube. It's too long. Most people don't know, we won't watch it, but I'll only have the deck on Top Down Trader. So thank you, Pat. Thanks, everybody. Talk to you soon. Enjoy your summer. Stop the share. That'll turn off the video. End. And I'm going to say goodbye in a moment. Stop this.